This is Nightly Business Report with Tyler Matheson and Sue Herrera.
It will be the biggest cut in the history of our country. It'll also be tax reform, and it'll create jobs.
Republicans unveil their sweeping tax overhaul plan. What's in it, and what could it mean for the economy, housing, and your money?
Inside the Federal Reserve, we understand that monetary policy decisions matter for American families and communities.
Ladies and gentlemen, meet the man who was nominated to be the next chair of the Federal Reserve, Jerome Powell. Those stories and more tonight on Nightly Business Report for Thursday, the 2nd of November.
Good evening, everyone, and welcome. Republican lawmakers proposed the most significant changes to the tax code in 30 years. Businesses big and small could see changes, and so could individuals. House Speaker Paul Ryan pledged fast action on the legislation, but the proposal ran into opposition almost immediately. Elon Mui tells us what's in the blueprint and where it might go from here.
Republicans call it the biggest overhaul of the tax code in a generation. The plan that's unveiled today creates 4 new individual tax brackets. The top bracket would remain at 39.6%, and it applies to households making over $1 million in income. Now, the limit for 401k contributions that are put in pre-tax, that remains at $18,000, and homeowners will continue to be able to deduct their mortgage interest. However, the deduction for newly purchased homes will go down from $1 million to $500,000. As for the estate tax, the deduction for the estate tax would double immediately from $5.5 million for individuals to $11 million. However, after 6 years, the estate tax would go away completely. House Speaker Paul Ryan said these are the types of reforms that Republicans were sent to Washington to do.
This is it. This is a very important and special moment for our country, for all Americans. Are we going to let the defenders of the status quo win and see our country continue down this downward spiral? Or are we going to realize the promise of our country? Are we going to revitalize the American idea? This is our chance to make sure that generations to come don't just get by, they get ahead in this country.
For small businesses and so-called pass-throughs, their rate will be 25%. And Republicans say they'll write special rules to ensure that it's not just a big loophole for the wealthy. For corporations, their tax rate will fall from 35% to 20%, and that'll happen right away, and it will be permanent. There will also be a special rate for foreign earnings that are brought back from overseas. The rate for repatriated cash is 12%, and there's a 5% rate for all other assets. But Democrats are slamming this proposal. House Minority Leader Nancy Pelosi said it only helps the rich and hurts the middle class.
The Ryan McConnell framework is not reform. It is, again, deficit exploding, multi-trillion-dollar giveaway to the wealthiest and corporations, delivered on the backs of our children, our seniors, and hardworking Americans.
House Republicans delivered their plan to President Trump at the White House today. They say he is all in on tax reform, but the hard work of getting this bill passed is only just beginning. For Nightly Business Report, I'm Elon Mui in Washington.
The proposed cap on some popular housing deductions not going over well with the housing industry. Shares of the luxury home builder Toll Brothers got hit quite hard, as did other builders today. Home Depot and Lowe's shares fell as well. Diana Olick explains the plan's impact on a market very important to many Americans, housing.
Whether you own a home or are thinking of buying one, the Republican tax plan will cost you more. One of the most popular deductions in the tax code, the mortgage interest deduction, got a haircut. Currently, it's capped at $1 million in mortgage debt. That was cut in half, but only for new purchases. So if you already own a home, you're still capped at $1 million. Still, there may be far fewer people itemizing and taking the deduction, given the doubling of the standard deduction. Currently, about 21% of households claim the mortgage deduction. That could fall to just 4%, according to estimates from the Tax Policy Center. Then to property taxes. The House plan caps them at $10,000. This will hit the Northeast hard, New Jersey, New York, Connecticut, which have some of the highest tax rates and highest priced homes. It will hurt less for states in the South, where property tax rates and home prices are low. Hawaii does have the lowest property tax rate, and D.C.'s rate is low as well, but home prices in both places are high, so it's a mixed bag. California has a comparatively low property tax rate, but home prices are some of the highest in the nation. Realtors say the plan puts home values at risk, and the home builders say it will cut younger buyers out of the housing market.
Our constituents are afraid that this is going to be a revisit of 1986, when after that tax bill passed, there was a significant housing recession.
Still, others argue that doubling the standard deduction might put more money in lower-income taxpayers' pockets, helping them to save for a down payment. The only trouble with that theory is there are currently precious few entry-level homes for sale. For Nightly Business Report, I'm Diana Olick in Washington.
So what could the proposed tax plan mean for the economy and the housing market? Ralph McLaughlin is the chief economist at Trulia, and Josh Feinman is the global chief economist with Deutsche Asset Management. Welcome to both of you. I'm going to start with you, Ralph, if I could, and because we left off there with housing. The gentleman that Diana interviewed said they're worried about a significant housing recession as a result, if it passes as it's written. Do you see that? What do you see in this bill specific to housing?
You know, at Trulia, we're not immediately concerned there's going to be a large impact on housing, and that's for two reasons. One is that 70 to 80% of homeowners actually don't itemize. Their house isn't worth enough, their mortgage isn't high enough, property taxes aren't high enough to itemize. And two, even if you do have a house that's expensive, you have a high mortgage, high property taxes, you're going to be grandparented in. So existing owners aren't going to be affected that much. But there is some bad news, which is that those that do have high mortgages tend to live in these expensive markets.
Right.
And on top of that, they're incentivized because of the grandparent clause to stay put. And that, we think, might actually make the inventory problem worse, especially in these very expensive coastal markets.
What does it do, though, Ralph, to house values, particularly in high-price markets where affluent buyers are prone to, or some of them are going to have to take out loans above $500,000 to pay for it?
Yeah. We might see a little bit of softening in those uber expensive markets. San Francisco, New York, they're going to be disincentives to buy those type of housing.
Yes.
And because of the property tax, there may be existing owners that might want to get out because their tax liabilities are going to go up.
Let's turn to Josh Feinman now and talk about the overall economy. Josh, feel free to react to what Ralph just said, but also give us your take on, if it passes as it's written now, what the effect might be on the overall economy.
Sure. I don't think it's a game changer. I don't think it's something that's going to push growth up to, say, 3–4% and keep it there. But I do think it has some positive elements to it. In particular, by moving towards a lower the rate, broaden the base type approach, a lot of people think that's more efficient. You lower the rate that both individuals and corporations pay on the next dollar that they earn, so you increase the incentives to earn. At the same time, if you reduce deductions, exemptions, exclusions, you broaden the base against which those tax rates apply and therefore mitigate the loss of revenue to the government. Now, giving people lower taxes, that's the easy part, right? That's like giving them ice cream. But, taking away deductions, exemptions, exclusions, that's the hard part. That's like kind of making them eat broccoli. And, people are not going to like that. And that's where the opposition to this tax thing is going to fall. And housing is an example that you talked about earlier on the show. So how it's all going to work out and whether, every constituency will go to the mat to defend a specific line item in the tax code. So it's going to be tough. In the end, whether there's enough sugar here to make the medicine go down, I don't know. But we'll see. Today's just the first opening salvo in what I think is going to be a
Josh,
long, drawn-out political
quick
war.
response, please, on the corporate tax rate coming down, presumably, to 20%. How important is that in helping American corporate competitiveness and in inducing companies that may have domiciled overseas to move here or move back here?
I think it's helpful. I think it does improve competitiveness. I think it does improve the incentives to invest. Some of the more grandiose, numbers that were being tossed about, $9,000 through American workers, I think that's over the top. But I do think some of the incidence of the corporate tax does fall on American workers. So if you do reduce that tax rate, they will get some benefit, at least over time, but
right.
Not as much as maybe has been advertised.
So Ralph, you get the final word here. If indeed we start to see some reaction in the housing market, how does that work? Would you start to see a softening or a tightening immediately, very quickly? How is there a lag time?
Yeah, I mean, the housing market moves slow, so there's unlikely to be any major movements, in the first, 4, 5, 6, 7 months, even 12 months, right? Okay. But over time, especially at that high end, which is where most homeowners would be impacted, we might start to see softening maybe over the next 1 to 2 years.
Okay. So nice to see you in studio. Please come back, Ralph. Appreciate it.
Great to see you guys too.
And also, Josh, nice to see you as well. Thanks for joining us, both of you.
All right, so how could the proposed tax plan impact your money? Tim Maurer is Director of Personal Finance at BAM Alliance, and he joins us here to discuss that. Have you had a chance to go over the numbers and just sort of come down on, do most people, and particularly most middle-income people, stand to see lower tax bills under this law than they would have under existing law?
Well, Tyler, to answer your first question, I have taken a glance, but I will say this. At this point in time, it's all commentary still, right? I don't want to encourage anyone to alter their financial plan based on a rumor. Let's wait and see what the reality shakes out to be, and then we'll plan from there. But certainly, especially for the middle income folks, we could see a meaningful change. If you were at, say, the $50,000 per year income level, seeing the standard deduction double can't help but help you. And similarly, they may find that their tax compliance with doing their taxes is simplified. It's easier because of that increased standard deduction. Now, if you're in the next income bracket up, folks who do have a home, who do have a mortgage, who may have been itemizing their taxes in the past, especially because of the mortgage interest deduction, well, now, with the standard deduction now raising quite so substantially, we may see that they no longer have the ability to itemize, and that may begin to change some people's decisions regarding debt. In the past, it's been seen, well, owning a home and having a mortgage is a good thing because you get a tax break. Well, there's a little bit of conflation there to begin with. We may actually find that people are making decisions with more clarity regarding housing and debt as a result of that increased standard deduction.
Right. There's going to be negotiating on this on the Hill. Probably some pretty significant negotiating. But one thing that we were wondering about was whether or not they would change the status of 401k contributions. They did not in this version of the bill, but the word is that may be one of those bargaining chips in order to perhaps raise the mortgage interest deduction. So are you worried about that?
I am concerned about that. As you can imagine, those of us who are financial advisors, if we start to see the mess with the 401k deductions, we're going to be very concerned, because what we see right now is generations of Americans who are underprepared for retirement. If we decrease the incentive for them to be saving for the future, I can't see what good could potentially come of that. So I'm hoping that they keep their hands off of all 401k, Roth IRA, and traditional IRA limits, as well as the 529 for education savings as well.
All right, Tim Maurer with the BAM Alliance. We thank you again.
Thank you.
On Wall Street, a late day rise in stocks sent the Dow to a record close in what otherwise was an up and then down day for the major indexes. On this very busy news day, investors were also looking ahead to tomorrow's jobs report. The blue chip Dow index rose 81 to 21,516. The Nasdaq fell 1.5 points, and the S&P 500 rose fractionally.
Still ahead, Apple's flagship product continues to charge up profits. President Trump has nominated current Fed Governor Jerome Powell to be the next chair of the central bank. If approved by the Senate, he would help to steer the world's biggest economy and his words could move trillions of dollars in global markets. Steve Leisman tells us who he is and where he stands.
President Donald Trump, in a Rose Garden ceremony, nominated Jerome Powell to be the 16th chairman of the Federal Reserve Bank. It was by far the most important economic nomination of the president's term to date.
He's strong, he's committed, he's smart. And if he is confirmed by the Senate, Jay will put his considerable talents and experience to work leading our nation's independent central bank, which has the critical responsibility to set monetary policy and monitor our banking system as a whole.
Powell, a Fed governor since 2012 who previously amassed a fortune working as an investment banker, is the first chairman not to hold a PhD in economics since Paul Volcker left in 1987. Powell praised outgoing Fed Chair Janet Yellen, but maybe stopped a bit short of explicitly pledging to continue her policies.
I've had the great privilege of serving under Chairman Bernanke and Chair Yellen, who guided the economy with insight and courage through difficult times. Inside the Federal Reserve, we understand that monetary policy decisions matter for American families and communities. I strongly share that sense of mission.
But based on his previous statements, markets aren't expecting much change at all. Powell has supported a gradual rise in interest rates and a slow runoff of the Fed's balance sheet, voting with Fed Chair Janet Yellen at every turn. He has generally supported the banking regulations adopted after the financial crisis, but has said some adjustments are appropriate. He believes the current economy to be strong and the labor market to be very strong. Powell, a 64-year-old Washington native, had originally been nominated by President Obama. The White House hopes for hearings before Christmas and quick approval to the 4-year term after the holiday break. And they believe Powell will receive Democratic support, as he did under President Obama. For Nightly Business Report, I'm Steve Leisman in Washington.
Apple's earnings would be our lead story on almost any other night. So let's get right to the results of the world's most valuable publicly traded company. Strong demand for iPhones helped the company earn $2.07 a share. That handily beat estimates. Revenue rose for the fourth quarter to more than $52 billion, helped by a rise in sales in China. Investors liked the results and the forecast of record revenue in the current quarter, sending shares initially higher. The company's market cap hitting $900 billion in late-day trading. Josh Lipton has more on Apple's quarter.
$46.7 million. That was one big number in Apple's latest earnings report. Refers to the number of iPhone units shipped in the quarter, and it was just better than what analysts had called for, which was 46.4 million. Another big number in this report was this December revenue guidance that Apple gave, calling for between $84 and $87 billion. The midpoint of that guidance is better than what the street had modeled, alleviating at least some concerns about supply constraints for that all-new iPhone 10, which goes on sale tomorrow. For Nightly Business Report, I'm Josh Lipton, Cupertino, California.
The government reportedly may sue to block Time Warner and ATT's proposed merger, and that is where we begin tonight's market focus. The Wall Street Journal says the DOJ may try to block the $85 billion tie-up. The article also went on to say that AT&T, Time Warner, and the DOJ are in talks to lay out terms that would let the deal win government approval. But speculation that a deal won't happen pressured shares of both companies today. As you see there, AT&T fell 1% to $37.13. Time Warner off nearly 4% to $94.70. Dow DuPont posted better than expected earnings and said it would cut jobs as part of a $3 billion cost savings plan. The industrial conglomerate, which was formed in September by the Dow Chemical DuPont merger, said results were helped by strength in nearly every division. The company said its plan to split into 3 separate companies will take up to 2 years. Dow DuPont is also hiking its quarterly dividend to 38 cents a share, launching a $4 billion share buyback. Shares were off almost 2% to 72.04. The world's largest generic drug maker, Teva Pharmaceuticals, will cut its full-year forecast for the 3rd time. As rising competition eats into profits, the company reported a plunge in generic drug profits as sales slipped. Shares hammered down 20% to $11.23.
Wayfair reported a wider than expected loss as new employee hires and a rise in technology investments weighed on its results. But the home furnishings company also saw a rise in active customers and said they spent more as well. So shares still fell more than 15% to $62.84. Despite serving more customers in the latest quarter, Starbucks reported same-store sales and total revenue that missed expectations. Earnings were in line with estimates, and the coffee chain said it plans to sell its Tazo tea brand to Unilever for about $400 million. Following the after-the-bell news, shares initially fell in the extended session and also ended the regular day down a fraction to $54.87.
The president is preparing for his first official trip to Asia. The 11-day journey includes stops in Japan, South Korea, China, Vietnam, and the Philippines. The president will be on the global stage discussing some very thorny economic and security issues, including, of course, North Korea's nuclear threat, trade imbalances, and market access for U.S. companies. 29 business leaders and officials will join the president in China, including executives from Goldman Sachs, Boeing, General Electric, Honeywell, and Qualcomm.
And there's one more item that many American business owners hope will be on the president's agenda when he is in China, and it is intellectual property theft. That type of copycat theft costs an estimated $300 billion annually. Kayla Tausche reports.
Outside Baltimore, Marlin Steel molds wire from Indiana and Illinois into storage racks, baskets, and deep fryers.
The wire used to be a car or a dishwasher, melted down. It's all recycled. It's all made in America.
These seemingly simple products require complex engineering. Marlin CEO Drew Greenblatt several years ago began seeing his items in Google searches for Chinese competitors.
We come up with such innovative, creative, novel ideas. We spend so much money on that, and then they just cut and paste it and steal from us. It's hard to measure exactly how many jobs we lost here. I mean, whether we lost 20 employees' jobs or 100 employees' jobs. It's hard to measure because people don't send you an email or a phone call you and say, hey, by the way, I bought from your competitor.
It's a cross-country complaint from small and medium-sized businesses lacking legal options and funding. Paulson Manufacturing in California makes protective wear for industrial workers and firefighters.
Within a year of anything new that I put out, I'm being copied somewhere in the world.
At a trade show in China, Roy Paulson learned they weren't just copying his products.
They even use our company name, duplicated all the products that we have that you can see on our website and have them for sale as a Paulson product in China. It's not just lost money to me, that's really lost money to my employees and to the community.
Senior White House officials say President Trump will highlight intellectual property in Asia. Trump launched an investigation in August, the original focus on U.S. companies whose data gets stolen through joint ventures.
Really, really good. I think you got a lot of variety here.
But business owners like Stephen Lang, who runs a New Jersey bridal company, want trade officials to consider penalties against all counterfeits from China.
These issues that I'm facing are on the back burner, but to me, they're the front burner. And without protection from my government, I'm not on a level playing field.
China's ambassador to the U.S. said the world's two largest economies inevitably will have trade issues, but they're a small part of the relationship and should be handled constructively.
My name is Drew Greenblatt.
Marlin CEO brought the counterfeit issue to President Trump ahead of his April meeting with China's President Xi Jinping and hopes it's still on the agenda.
We're too small to fight this. We need the government to protect us and not allow Chinese and foreign companies to import into America our products, things that we have creative license to make.
China is also a customer for many of these companies, making the decision to speak out a delicate one. It's a delicate issue for the White House as well. Experts say China could retaliate for any action the U.S. decides to take. For Nightly Business Report, I'm Kayla Tausche in Washington.
Coming up, Ferrari made a ton of money, but can it find the same success with SUVs and theme parks?
The Italian automaker Ferrari reported record earnings and raised its full-year profit target, but that wasn't enough for investors, and the next big challenge is whether Ferrari can be more than just a high-end car maker. Robert Frank revs the engine.
Ferrari is racing ahead of its financial targets, and its stock price is hitting new highs. The question now for the fame-prancing horse is whether it can keep its brand cachet even as it moves into SUVs, theme parks, and more merchandise. Ferrari reported a double-digit rise in earnings and said it will hit its annual earnings target 2 years early. Most of that is because it's selling more cars at much higher prices. They're expected to sell 8,400 cars this year, up from 8,000 last year, and they range in price from $200,000 to over $1 million. But Ferrari is also transforming into a luxury lifestyle brand. They've got 46 stores selling hats, mugs, and watches. There are now 2 theme parks, one in Dubai and another in Spain. They're doing sunglasses, office chairs, and they're doing well in Formula One racing, which also generates revenue.
Now, to Ferrari purists, that rising production and all that merchandise means they're cheapening that once exclusive Ferrari brand. That's going to be even more of a challenge in the coming years when they make an SUV and are then subject to the emission standards, which will force Ferrari to go electric. Electric hybrid and SUV, 2 words we're not used to hearing with Ferrari.
The question is whether they can ramp up all that production in their factory in Maranello and make electric vehicles. Meantime, the brand's history is still proving lucrative for collectors and owners. This 2001 Formula One race car driven by Michael Schumacher will be sold by Sotheby's this month at an art auction for over $4 million. And because of safety and emission standards, you can't even drive it on the road. For Nightly Business Report, I'm Robert Frank.
And that does it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Matheson. Have a great evening, everybody, and we'll see you tomorrow.